Hello and welcome to Mark's Trading. Today we're going to talk about trading breakouts. Let's get started. Alright, so I do enjoy trading breakouts. Breakouts can be done on many different time frames. They can be done on a 5-minute chart. They can be done on a weekly chart. Remember, the more historical back data you have, the stronger the signal will be. However, the longer it is, most likely it's already advanced significantly. So we need to really look at that sweet spot. And we'll go into that in a minute. So a breakout in a weekly chart might not be the most ideal. Now, keep in mind, regardless of what anybody says, breakouts statistically only have a 50-50 chance of not failing. So you will fail often with a breakout. There's not too many ways that we can really increase those odds. We could try, and we'll go over a couple of those, but again, like trading, it's a game of probabilities, and what we want to do is increase our probability of success. But you're going to have to take losses. Just make sure if a breakout fails, let it fail quickly enough so you can get out. There's many times where a breakout will back and fill and then take off again if it was a significant breakout. So let's take a look at a couple different ways that I look at a breakout. Okay, so to confirm a breakout to help your odds, I do look at the catalyst first. What was the catalyst for the reason the stock was breaking out? Was it a fundamental breakout? Did earnings come in significantly better? Did revenue significantly surpass the top Wall Street analyst? Did the company have some type of event that was causing that breakout? Maybe it was a new CEO. Maybe it was a company restructuring. Maybe they raised a significant amount of capital. Whatever that may be. Maybe it was a secular industry change where you had deregulation in a certain industry like healthcare. So I do look at those catalysts. It has to be something in terms of a fundamental, event-driven, or a secular industry change that was positive. The next thing is I do look at the short interest. Now, the more a stock is shorted, the potential, the greater the move higher will be. And that's just for obvious reasons. It has a lot of ammunition where the shorts have to buy the stock. So let's take a look at one recently that had a massive breakout, and we'll talk about why it had a breakout in a minute. Okay, so let's go to statistics under Yahoo Finance, and it's a very easy way to find out what the short interest is. Okay. Now, the company Bed Bath & Beyond, and I have no recommendation on this, we did own it and sold it, but the shares outstanding here are 126 million shares. Okay, now what we want to see here is how many shares are actually shorted. Now, before the stock broke out in the prior month in September, it had 72 million shares shorted. That is incredible. 54% of outstanding shares, 72% of the float. That is a lot. So potentially any positive catalyst where the stock does break out is going to send this stock significantly higher. All right, so that's number 2, looking at the short interest. Now, granted, there's a reason why the company's short. Has such a large short interest. Fundamentally, the company is deteriorating, and that's just for the obvious reasons: store closings, revenue declining, Amazon eating their lunch, people not going into the stores because COVID. But what happened? The number 1 bullet point: the fundamental story changed. Brought in a new CEO, and they started to restructure the company, close down stores that weren't profitable, and try to firm up the balance sheet by selling some assets. Then we look at technically what happened. Well, technically, it had a long period of consolidation and stopped going down, and it built a very long base. That's positive because it had a lot of short shares. Then the stock became extremely oversold, and then technically we got a buy signal. So let's take a look at what that looks like. Now, I don't use candlesticks. It's just too noisy for me. And again, I don't like RSI and I don't use MACD, but I will use them on what you know that we like to look at, which is the Renko. It removes a tremendous amount of noise because it's not looking at any time. It's just you're purely looking at price, and it's looking at an average true range, open, high, low, close. And it's much more helpful. Is it foolproof? Absolutely not, and it has its limitations. But I do like looking at it. I will never look at RSI or MACD on a candle. They are, again, a derivative of the price series chart that it is attached to. So RSI and MACD will look very different in a candlestick than it will in a Renko. But you can see here that the RSI was slightly oversold. Again, RSI, even in the Renko, is not great. We can see here again the MACD is below the signal line, or the zero line, I'm sorry. And if you changed it to a candle, you would see here that the RSI was not really oversold at all, and the MACD had a very different story here. It's above the zero line. So again, it's a derivative of the chart itself. So what we do see here is, though, and it had a number of false breakouts, but when the positive story, and once it broke above its ATR stop on the Renko, that could have been a buy signal. And that really is how I look at breakouts. The other way, it's probably even more simple and easier, is just using our own proprietary system in terms of trend following. We had a 0 rating, or basically a hold, which was a 3, and it slowly started to develop to a buy, which is a 4, and then moved to a strong buy. And once it built up that momentum, it looked very nice. The counter trend, which is in red, showed that sellers were stepping away, buyers were stepping in, and it's much easier where you can just get alerts. So you could do either way. I think our proprietary system is better. A, you're going to get those alerts. B, it's going to diversify away from any type of charting, because the way that we're calculating, we're not using moving averages, we're not using RSI, we're not using MACD. And I think it definitely is more, it helps deliver more alpha and generate better insight into really what is happening. But either way, you could play that type of breakout. We want to see a long base where the stock has not done anything for months, had that breakout with the ATR. If you waited too long for, let's say, a 6-month breakout of price, it would have been probably a little too late. Same thing if you're looking at a bar chart. Once you got the breakout, you were getting the breakout at around $19. Now, it still would have been a decent trade, but it's almost after the fact, because you could have gotten into the stock much earlier with the Renko or even our system. So I don't like candlesticks. They're very noisy, and there's just too much random noise built into the price series there. So hopefully you got something out of this. Please check out the other videos.